Hi everyone, this is Nikhil Mishra from Setu Capital. Today we'll be looking into a very interesting business, which is UGRO Capital. It is an NBFC which is into SME lending. So it is trying to pioneer a co-lending model or co-origination model in Indian landscape. There are multiple other entities in some in listed and unlisted segments which are also doing similar things. But this is one of the largest and which specifically focuses on this particular types of lending. We'll have a look into its various operations and financials in the presentations. So right now it is into an exponential growth stage because it has recently started. It is having a market capitalization which falls under small cap category. So let's have a look at the business. So this is an NBFC which is trying to solve the $700 billion MSME credit gap. So what basically this means is that there are MSMEs which deserve to be lent but are unable to get funding from banks. So there is a by some study there is a gap of around $700 billion, and this UGRO is trying to fill in for that. So it is using an off-balance sheet AUM approach by through co-lending or co-origination. It has an extensive focus on data and technology driven approach from as vis-a-vis the past credit-led banking model where there is credit assessment. What they say is that they rely more on data, although everyone claims to be, but over here they claim that the data decides. They have several systems and um, technologies which are built in where they feed in the banking statements, the GST data, etc. And accordingly, whatever the model says, they just do that. They don't means rely on conventional forms of credit assessment. So this was started in 2018 by the former Religare head. Uh, Most of us are aware about Religare and what has happened in the past with them. But the management or the head, Mr. Sachindranath, had quit 2 3 years ago before the whole fiasco where Malvinder and Sivinder Singhs, the Ranbaxy brothers, siphoned off thousands of crore rupees from that NBFC. But the promoter in this case says that he started looking into the corporate governance issues and was uncomfortable, and that's why did means resign from his post because of that. In 2018, he means went to the private equity players, and they were willing to finance him. And there was a former company called as Chokhani Securities, which they acquired, which had a NBFC license, and they started the NBFC and just changed the name and started the NBFC. They brought in very reputed management people from other organizations, and they have been since trying to grow and try to create a lending as a service model, which is completely unique. Although time will tell whether it is successful or not, because in the past in financial services, particularly in lending, for every one Bajaj Finance there have been tens of others whose name we do not recall right now. Nobody they started with a very interesting means product approach, but we're not able to scale it up because there comes credit challenges, and then they have to just slow down their growth, which takes away the excitement from capital markets, and then they are not able to raise further capital. And because of the leveraged financing model, the losses are quite large for them. So this UGRO Capital also did a comprehensive study of various sectors along with CRISIL, and tried to identify sectors or industries where there is an MSME credit gap, and where they are willing to disburse capital. So they have a variety of assets or product suite. They mainly do financing of products which are which are very useful for the MSME, which are productive, and without which the MSMEs cannot run, be it supply chain finance or machinery finance, etc. There are various ways through which they also source their loans. So they have multiple partners who act as direct sales agents. They also have a branch-led approach where they deal with customers who have large ticket size. Now you can see that the return on the yield of the lending rate is on the higher side. There is a reason behind it. The reason is that UGRO itself borrows at a very high rate. The average rate at which UGRO itself borrows is 10.5%. It lends at around 15-16%, and there is a net interest margin of 5-6%. They also earn a bit of banking fees, etc., when they do securitize or co-lend the products. The ticket sizes in various means advances is in the range of, let's say, 10 lakh to, let's say, 3 crore rupees. They also claim that for every MSME they have some or the other form of products, but obviously they can't compete with very established MSMEs which have banking partners who are willing to lend them at relatively lower cost, and in fact the cost at which UGRO itself borrows. So they are more into segments which are relatively considered to be less credit worthy. So this was on the asset side. Now let's come to the liability side. So as I have said, itself borrows at around 10.5%. It co-lends or co-originates with other banks, takes a small part of its assets on its books, and earns fees from banking partner. In a way, it acts as a DSA for the banks. Although not, we should not get into the technicalities, but something akin to like that. But what they are trying to achieve is that they are trying to create a platform where multiple banks can partner them, and there are customers which needs credit, and they will along with them, they will do the credit assessment of the borrower and give it to banks whether they want to co-lend or means co-originate along with them or not. Now they also do asset securitization and sell it to banks. Securitization is basically the bundling of the various credit of, of borrowers. So they also do impact financing along with DFIs. Let's have a look at the financial performance. So as you can see that the AUM of the bank has been growing exponentially from 861 crore rupees to 2,969 crore rupees by the end of FY22. The reason for this large growth is what has happened. They already have the capital from private equity. Now they are disbursing it. They took some time from 2018 to 2019, one and a half year, for making the tech stack and for getting all the regulatory compliances, asking the public sector banks means to in order to co-lend along with them. Their asset book has mainly been formed during the COVID, so it is not tested as of now because most of the disbursals have happened during COVID. So they must have been extra cautious about what will happen to the borrowers. The GNPA ratio is maintained at around 2.3%, or and net NPA, non-performing asset, is maintained at around 1.7%. They claim that in the future they will be in the range of 1.5%. The total debt, the leverage ratio is around 1.89. In case of banks, it ranges from 4 to 6 times. But in NBFCs, obviously, after the ILNFS fiasco, then the credit rating agencies were not comfortable with high leverage for NBFCs, and subsequently, most of the NBFCs have to bring it down. The count of lenders which have partnership with them has grown from 7 to 55. More or less every public sector bank is along with them. They are also tying up with private sector banks, different private sector banks. So the sub classification. So the AUM has been classified in various forms of channels, branch led, secured, unsecured. Secured means there is a collateral behind it. Unsecured is where there is no collateral. In case of secured, obviously the lending amount which they can give to the borrower is more high vis-a-vis the unsecured. They do they do various types of loans. Most of them have a high yield. As you can see that the prime loans have around 15%, while micro loans they give at a rate of around 21.8%, which is considerably high. So this showcases that they do have customers which are relatively either either they have some or the other means challenges that they cannot simply borrow with means established bankers, because of in terms of, let's say, they might want 3 years of ITR, they might want some other GST data which they don't have. And this company claims that they have built up the technology in which in in which they can easily do a credit underwriting by taking the bank statement and other basic inputs which are available with these customers. Still, the rate of interest which they generate is high, and there is no point. Uh, the problem also comes from their cost of capital. The cost of capital is itself 10.5%, which is quite high. So they will have to lend to customers which are willing to pay more rate of interest. So the UGRO is transitioning itself to the co-lending. So you can see that the on-book portfolio has been decreasing, while the off-book portfolio means the co-lending, which they do with other banks, generally around 80% goes to the banks and 20% remains on their books. The off-book portfolio has come to is around 16%, 16%, which they wish to increase by 2025 to 50%. Now, this will happen, and this is what their target is. There are some important observations which I found out about this company. In terms of the future projections, this company is targeting an AUM, asset under management, of around 7,000 crore rupees by FY23. The current level of AUM at the end of quarter one FY 2022 23. Obviously, the quarter two results will also come in a matter of time, in a matter of, let's say, 1 month. The current level is 3,600 crore. They wish to grow by the end of this year to 7,000 crore rupees. And by FY25, they wish to grow by till 20,000 crore rupees. Means in a matter of 3 years, less than 3 years, they wish to grow their asset book from 3,600 crore to 20,000 crore rupees, which is more or less 5 times the AUM of what is at present moment. So all these asset growth will require equity infusion, and that because they will have to infuse equity, they will have to issue shares which will which will dilute the existing shareholders. But in order to sustain this high growth, there will have to means will have to go through this equity dilution, because there are very few banks in India which are able to generate capital. More or less, I don't think so. Even HDFC Bank generates capital which is means equivalent to its requirement. So it's an ongoing phenomenon, and there will be equity dilution for existing shareholders. Now, this being a very established means the segment which they are dealing with is NBFCs. There are multiple established players, and the rules and regulations of RBI are quite stringent. So, in order to fulfill all those, they have to bring in a lot of people who of very high caliber. The remuneration paid to them is also on the higher side, but that is the demand of the situation which this company feels. Just for an example, the MD and CEO it's himself takes around 4 crore rupees, 3.95 crore rupees. Then there are other board of director members which take around 40 lakh rupees in order as board of directors. There are 5 meetings they attend, so that's akin to around 8 lakh rupees per meeting. So that is more or less the industry standard for means bringing in high caliber people. So this is a cost which investors and the company will have to bear. Then the other problem is that co-lending is completely untested in India, and the bad times will certainly test the relationship of banks with UGRO. As of now, they are willing to means lend UGRO at 10.5%. Let's say if the delinquencies of UGRO rises, in that case, the banks will have to renegotiate, and they might want to charge more to NBFC, which has high delinquency. But that we'll see what will happen in the future. So it has a very high cost to income ratio of around 65% at the present. But that is because they are setting up branches, bringing in new people, establishing the tech stack, etc. The industry gold standard which everyone wants to reach is like HDFC Bank has around 35 to 38% cost to income ratio. That's a, that's a phenomenal number, which is one of the best in the world, I would say, not even in India. So these were the important observations. The gross NPA ratio is at around 2.28% as of 31st March 2022. UGRO is trading at 1.25 times price to book ratio, which is not very high. Means the way the private venture capital funds invest in untested and cash burning startups, this company is at least means trying to improve its profitability. They also claim that by the end of FY25 they will reach around 45% cost to income. If that happens with a 15% to 18% return on equity, if that happens, then this will be a very good thing. Now, what will happen to this UGRO will be decided upon how their book performs over the years. If the asset quality is maintained at this level, then it would become a bargaining price. It would be trading at a bargain price. But if in case the delinquencies increase or the NPAs increase, then there will certainly be pressure on the NBFC. Then they will have to go into the capital conservation mode, and their cost of capital might also increase. We have seen sustained period where multiple banks or NBFCs have kept on trading at more or less in their book value. You can take the example of South Indian Bank, etc., Lakshmi Vilas Bank. There are multiple other banks as well, which have been trading at lower book values. But UGRO at this moment is in the exponential growth stage, and there they also have a policy of not lending more than 1% at the highest level to each individual borrower. If the asset quality is maintained at this stage, then it will be a very good investment. It would be a good investment. But given the growth aspirations which they have, but if in case it dwindles or falters in the asset quality, then it will not be a good situation because it will have to keep on diluting the existing shareholders. And as per the average prices at which it trades, it will have to dilute its capital at lower price to book. So most of the assets of UGRO is also built up during the COVID-19, which is untested. Only the future will showcase how the things transition for UGRO. So this brings us to the end of this UGRO Capital presentation. None of the discussion should be construed as investment advice. I'm biased. I have a very basic position on this company, tracking position, I would say. But I'm invested. I would like you that in case you wish to means invest in this company, then do your own research. This was purely for an educational purposes. Consult an investment advisor for all your investment advices. So thank you everyone. Thank you patiently for watching this channel, for watching the content of this channel. And in case you're new to this channel, don't forget to subscribe. More or less, I focus more mainly on the micro cap and small cap because that's where the most interesting things happen, and that's where being a stock picker, it is what means excites me the most, and where the most wealth has been created and also destroyed by gullible investors who don't have any idea about what should be done. So it's a very interesting category, and don't invest in micro cap and small caps unless and until you are willing to go in depth and do a due diligence of your own. Thank you. Thank you very much. Bye.